Hey, what's going on, guys? Today I'm going to be reading your comments. I've gotten a lot of comments over all these videos, and I feel like this is going to be a good chance to show and answer a lot of your questions in this video. I know some of you had some very specific questions that I may have not been able to answer in full detail. So this video I'm going to go over a bunch of different questions and hopefully answer a lot of your questions out there. Okay, so let's just get right into it. How much money have you risked per trade? Please tell me, please. Okay, this guy really is asking nicely, so I'm gonna answer. So it just depends. Sometimes I'll risk 1%. If I feel it's a high probability setup, I usually tend to risk more. If it's a lower probability setup, I tend to go with usually 0.5%. Sometimes I'll do 0.25%. But it also does depend on your risk to reward ratio. If you're using a really high risk to reward ratio, like a 1 to 20, let's say, usually I'll tend to risk a lot less. But recently I've been using lower risk to rewards. I find my win rate has been increased and my profitability has increased with it. If you're using really high risk to reward, you're not going to want to use 1% because if you lose 10 trades in a row, you've already blown 10% of your account. So use anything from like 0.5% to 1/4 for the bigger trades. How do you know where price is most likely to reverse from to take your entries? This is a really good question, and he actually goes on to ask a bunch of other things. Basically, he was just wondering why sometimes I'll enter on the trend line and while sometimes I'll enter further back into liquidity. And I'm going to show you actually right now, we're going to go over that. Okay, so recently I sent out a trade to my premium group, and this is the trade I had marked out here. Unfortunately, price never ended up pulling back to my entry like I thought it would. And this is a perfect example to answer what you were asking. So basically, I have a general idea where I think price will come back to. Usually that involves, some order block action, some areas of high volume, and some areas where I think liquidity will most likely rest. So it kind of tends to be where I think price will most likely hit out of this entire area. That's where I'm going to set my entry for. And obviously, if I think price might come up to, let's say, this area here, I will make sure to have my stop loss above that. That's why entering further back is better, because you get lower risk and then it increases your risk to reward ratio. So entering early sometimes can be a little bit difficult because you're not sure if it will move necessarily higher. So the answer to your question is I basically kind of taken an average of where I think it will most likely go, and sometimes I miss the trades, like this example here. I was trying to enter up here and I ended up missing it. The thing is, there will be multiple more trades to come. It's better to wait, because I had also a lot of people who wanted to enter, and some of them ended up entering down here, which obviously, it's a little bit more risky. But yeah, overall, sometimes it honestly just depends. Sometimes I'll enter a little bit earlier. If I see a lot of rejection like it was happening here, I was actually really tempted to enter. Unfortunately, I never did, and that's gonna happen, so. All right, next question. Do you have a trading plan? Yes, I do have a trading plan. I don't have this very strict, exact, I follow this step-by-step trading plan. It's like driving a car, you get used to it. Like anything, it just becomes second nature. In the beginning, I did kind of write down an order of things I wanted to do, but now it's just all kind of programmed in me. So I do have a trading plan. It's just second nature at this point. Pretty much just sit down, usually for the New York session, and I'll trade for a couple hours. I make sure to go through every single pair, look for possible setups, look for momentum, and then I look for breaks. And then if I find things are either gonna break or have already broken, then I'll look for entries. And if things haven't broken yet, like if I'm looking for a break at the lower high, I'll end up setting a alert, and then I just kind of wait for that alert to go off. It's a pretty simple process. The more simple, the better, and that's why my name is Simple Forex. 64-year-old trader. Excellent videos, thank you. 2 questions. Examples of your money management. Also, can you suggest some programs where we can look at historical charts to practice trading, especially the 15-minute bars? I'd actually like to do some simulated trading. All right, well, the program I like to use is just called TradingView. Basically, if you get a higher plan on it, you can use the replay option here, and it's a great tool for back testing. And that's actually how I came up with my strategy. I just did a ton of back testing. And money management. So best way to money manage, obviously your risk management is everything. You don't want to be spending half your account on one trade. Like I said, stick to 1% or lower, and then always make sure that you are having a plan to obviously compound. You know, if you have your own funds, that you're compounding those funds and that you're also paying yourself. Other than that, there's nothing really else to it. As long as you're saving and investing, that's all that matters. How long do you practice a day? A couple hours every day. I replied to Money, a couple hours every day. Especially in the very beginning, it was a lot more. I'd spend probably like 5 to 8 hours on the charts every single day. Now it's only a couple hours, usually one kind of full hour sitting at the chart, and the rest is kind of like 15 minutes here, 5 minutes here, 5 minutes here, spread along through the day, just checking the charts every 15 minutes or every hour, just, you know, keeping an eye on things. And other than that, I get to go around and do whatever, so I don't really have to be on the charts all day long. Make sure to set alerts so I don't have to do that. Do you have a course? I do have a course, and thanks to Chris DLC here, I do have a course, $60 per month. That is right, very cheap. I have an entire course. You could literally just pay for 1 month of the membership, have access to the course forever. The link is down below. How can I join your Discord group? Link is also down below. Do you manually exit out of trades if it's going against you? Yes, sometimes they do. It also depends kind of like what time of the day it is. If I'm going to bed and I see it's turning against me, I might exit. But most of the time, I'll just let it hit my stop loss. If it hasn't hit my target, obviously if it's really close to my target, sometimes I will exit if I notice, you know, it's rejecting off certain zones. Forex is incredibly difficult until it becomes incredibly easy. At least for me, I would say that is false. Forex is incredibly difficult. It doesn't get easier. You just learn to become profitable. Just because you're making money doesn't mean it's easier. At least you're doing some difficult work for some money. In the beginning, you're doing difficult work for no money. That's the only difference. How long have you been trading? I have been trading for 3 seconds. I think that's the comment I put on there. But no, I've been trading for since 2017. So I got into trading when the big crypto boom of 2017 was happening, and I haven't looked back since. How old are you, bro? Once you actually put in the comments, how old do you think I am? You have to take a guess. But I actually am 12. I put that in the comments as well. And he says he trusts me. So yeah, I'm 12. What exactly is an imbalance in the market? Well, let me show you Neo's 50-50. So an imbalance is in the market is when you have very impulsive moves like this, and price will tend to fill that imbalance. So you'll see this a lot in the market on every time frame, everywhere. For example, like here, this is a nice imbalance here, and price comes to fill in this zone. Now, obviously it doesn't happen every single time, but majority of the time when you have some sort of imbalance like this, price likes to dip back into those zones to fill the imbalance. Like everything in life, constantly trying to find balance. Does the same exact thing in the markets of trading. Imbalances usually happen when there's an impulsive move, especially like this where there's no red candles at all. Price will like to tend to fill these areas. You rarely see the price just move up and just not come back, unless you're trading maybe an indice. Sometimes I notice that happens, but with most Forex pairs, you're going to see these imbalances, and they're good spots to look for price to go to while you're trading. What are your MACD parameters? Well, let me show you right here. MACD, boom. These are my parameters. There's the inputs, there's the style. You can pause it if you like. What if there's no wick on the breakout candles? Now, some of you may be like, what is he talking about? This is what I'm talking about. Every time I'm looking for a true break, let's say I want this lower high here to get broken. Here is the candle right there. Now, if you're looking for a true break, price has to break above the wick of this candle that has broken out. Now, if there is no wick and it is literally just the candle, you just mark the top of the candle and you wait for price to break above that. That's it. Doesn't matter if there's a wick or no wick. What's the difference, by the way, order block and supply and demand areas? I think you're just asking what the difference between order blocks and supply and demand areas. Well, there's no really big difference. I consider a order block to kind of be similar to supply and demand. The only difference is it kind of happens at a midpoint rather than at the top. So for example, the top of this here, let me actually just clear this up. The top of this here would be a supply and demand zone, and then the bottom here would be a supply and demand zone. Now an order block would be something in the middle like this, where there is this kind of last final push up before a push down. Price will normally interact in that area like you see there. Where can I find a link to join your premium group? Down in the description below. Is there anything sacred? Yeah, I'm sure there's a lot of things that are sacred. Man, I got some sacred sauce for my trading, but that's very sacred, and I can't really share some sacred things that I have. You know, I might end up sharing it for maybe like a different course in the future, but there are some sacred things that I don't think I'll ever tell anyone, and some things that aren't related to Forex either. What time frames do you use? I use almost every single time frame. Right now, the main time frames are the 1 hour, the 4 hour, the 15 minute, and sometimes I use the 16 hour. Actually, a lot of times I do use the 16 hour because I like to work in intervals of 4, and 4 times 4 is 16. So that's why I use the 16 hour. Where am I located? Do you trade from US? Curious about Hanko trade. Well, Joe, I am actually located on planet Earth. That's where I'm from. Do you trade from the US? I don't know, but I'm on the exact same planet as you. And Hanko trade does work in the US.
Wow.
Wow. So that is going to be all the questions for this video. Hopefully I answered a few of your questions. If you want me to make another video on this, let me know in the description down below and put all the questions you want in there, and I'll get around to some of the better questions that I find. Hopefully you enjoyed this one. Let me know if you like it. I will make a part 2, answer some more questions for you. Thanks for watching.